put there. There we go. Okay, let me just admit. There we go. Hello, Daniel. How are you?
Hey, how's it going?
I'm good, man. How are you?
I'm good.
Yeah. All right. Okay. So
Hold
everything.
on, let me grab a notebook real quick.
All right. No problem. No problem. Damn, look at that move. Okay. That's great. That's great. That's great. That's great. Let me just put this there, like so. All right. So, first things first. Of course, um, I looked at your work, um, and then I saw on the first one, odd JPY on the daily. Yes, you can identify the impulse, and then you manage to identify the inverse head and shoulder on the daily, which is a good thing. So now also, what else? What else did I notice? On card JPY, it's fine. Card JPY, you identified it the way I would have identified, and then EuroCAD also almost the same thing. Actually, EuroCAD it's actually so clean. EuroCAD it's so clean. On EuroCAD, it's so clean. Yeah, EuroCAD you did it. Yeah, yeah. Yeah, on EuroCAD it's actually good. And then CAD, yeah, that's the one. CAD JPY. I can just add on CAD JPY. I can just add on CAD JPY. Let me just quickly do this. On Nasdaq. Okay, because on Nasdaq also you can. Wow, Euro JPY is looking good. Okay, let me look at it. US 100 index. Okay, what time frame is this one? It's daily. Oh, okay. No, I can see because this is that Nasdaq that I don't think we use this one. Do we use this one? Yeah, I know. Because there are different. Let me show you something. For example, yeah. So for example, this was the NAS that I have. This is US NAS 100 like so. So this is the NAS that we have. So it's not US 100. So even if I go to the daily here, okay. Oh, no, I see. Because here on your daily you have this double bottom, something like this, and then you have this. Oh no, I see it very well. I see it very well. Yeah, yeah, it makes sense. Because you have something like this. You have something like this, and then yeah, it was something like this. But this one is yet to close. That's the problem. This yeah,
That's just something I'm
yeah. So this one is yet to close, so we can't really know if it's going to close here or something because
yeah.
sent this setup last week. I sent this setup last week, I think, if not Friday or Thursday. Yeah, you got it on gold, ne? It's a good one, that one. That was a good one. That was a good one on gold. So, and also there's a lot of setups like they're just too much. We're spoiled for choice. That's the problem. We're spoiled for choice. So, okay, no, I understand Nasdaq in your perspective, but this move, right? Because your structure is here, and I understand that it could still be possible because, all right, this is the 90, right? This is actually the 90%. So this is the lower time frame. Yes, this is the yeah. So this is the 90%. So it might actually push to the upside now. It might actually push to the upside. It is possible. So we'll just wait and see. Because today is Monday. So tomorrow, that's when the market will start giving us those directions to say, okay, we're gonna go here, we're gonna go here. You see. So we'll just yeah. Also, all in all, it looks good. It looks proper. Then so now what I'm gonna do now this uh, mm, okay, so this is, which one is this one? This is on the watch list. I don't want something which is already on the watch list. Okay, this is Euro USD. Just wanna grab one pair. This is Euro odd. Yeah, it's fine, it's perfect. Okay, it's no analysis. Yes. Okay. Oh, all right. Yeah. Okay. It's a bit messy, but that's how it is. Sometimes we have to work with the charts as messy as they are, right? So I wanted something which has proper structures. Let me just take. Yeah, New Zealand USD. I can work with New Zealand USD. Okay, New Zealand USD. There we go. Still moving nicely. Eh? We caught this trade last week. We called it from here. Okay, let me just remove all this. Okay, so now since we have learned about the nature theory, and we have learned about and we have learned about structure, and we have a brief understanding of impulse and correction. Now the next phase will be going into multi-time frame analysis. Now the next phase will be going into multi-time frame analysis. So what we're gonna do now, we're going to be everything that we did, we're gonna be using it here. Everything that we learned before, the nature's theory, the structure, the impulse and correction, we're gonna be using it here when it comes to multi-time frame analysis, right? Let me just reply here. Okay, so now here on multi-time frame analysis, what we basically do is that we use the monthly, the weekly, the daily, the 4 hour, the 1 hour, all the way to the 15 minutes to get our entry. Okay, so most of the time we don't use the monthly time frame, but we use the weekly, the daily, the 4 hour, and then the 1 hour, and then 15 minutes to get our entry. All right, let me just I have someone wants to join us, the other guy. Okay, so what happens here now on multi-time frame analysis is that we get, let me just admit, Welcome, PK. I see you. Then this is PK. Is one of our head mentors. Okay. So, PK, we were busy with multi-time frame analysis. We just started with multi-time frame analysis. So we're going to be talking about multi-time frame analysis. So as you have seen, we have covered nature's theory, we have covered structure, we have covered impulse and correction. So now we're going to move to the next part, which is multi-time frame analysis. So here on the multi-time frame analysis, basically what we do is that we check our higher time frame all the way to the 15 minutes to get our entry on a particular pair, right? So this helps us to understand in whole where the market or where the currency pair or where the price is going in future. So we can be able to identify to say, no, now we know that the outside structure has, let's say, for example, two touches, and we are waiting for the third touch on the outside structure, right? So it means that whatever you'll be doing on the inside, it will be based on what is happening on the outside. So if you are waiting for that third touch on the bottom, it means that inside your structure, you'll be looking for sell position. When you'll be looking for sell position. So when you go to the daily, when you go to the 4 hour, when you go to the 1 hour, you'll be looking for more confluence to give you those sell positions. Okay. So what we do here on what we call multi-time frame analysis, for example, let me just start. Okay, there we go. What we do basically, for example, let's say let me just get let me get an area where we can go back in time. Okay, all right, it's fine. Let me just let's use here. Okay, so this is, so we wanted to catch, let's say for example, we wanted to catch this move here. Let me just yeah, like so. So let's say now here on this, we see that we have the impulse with the correction, and then now we're looking to catch this correction to the downside, right? So it means that our analysis now, let me just remove this. Our analysis now will be looking at this correction, right? We'll be looking at this correction so that we get this impulse, because we want to get an entry for this impulse, right? So now if I can just remove that, and then where's my vertical? There we go. Yes, so that this will be our cutoff point, like so. And then let me just put this say here. So now what we do, say for example here on this multi-time frame analysis, is that you will start from your weekly time frame. You will start from that weekly time frame, and then now when you understand that price, now looking at this area, price has been coming here down on an impulse, right? On an impulse, and then after that impulse you expect what? That correction, right? Because you can see we have this impulse, we have this correction, we have the impulse which broke out, and then now we have what? That correction, right? So now what we do with multi-time frame analysis, basically, now let me just remove this. So for all your charts, everything that you do, I always say, guys, multi-time frame analysis is power. So now if I can just come here, I highlight this was my highest high at this point of time. Let me use this. So at this point of time, this was my highest high, right? and then from here this was my lowest low. This was my lowest low on the weekly. So what you can see now, or what you can identify now, we are trying to catch this move, this impulse. So what we can see now, okay, we had this impulse and then we had this correction. Now we want to understand, remember what I said with a correction. We want to understand that it's either a continuation correction or a reversal correction, right? It's either a continuation correction or a reversal correction. So now when we get to this correction like this correction now is going to give us what we call a pattern. Okay, it's going to give us those patterns now, or those structures, right? We're going to get those patterns or those structures. So from here now, on this correction here, what is it that now we know? We know that we have the impulse, we have a correction, and then when you look at this correction now, this correction, it's a continuation correction, right? We have the impulse, we have the correction in the form of a bear flag. So we'll get to those patterns on the next lesson, right? Right now we're just focusing on this multi-time frame analysis. We'll get to patterns on the next lesson. So you will hear us saying bear flag, bull flag, and all those stuffs, but you'll get to know them also, and it will be part of your second nature. It will be just like second nature to you. So now what we see here, we have the impulse, we have the correction, right? So remember what I said. You remember when I said that there's always, the market will always do what? Come back 90% of the time, right? The market will always come back to where the correction started 90% of the time. So now this structure, right? This very same structure, I'm gonna now go to the daily time frame. Let me go to the daily time frame. So now when I go to the daily time frame, then what I can see now, it's still, you can see it's still the same structure. So what I'm just going to do on the daily, I'm just going to adjust. Remember what I said, that when you draw your structure, it must be straight to the wicks, right? It must be straight to the wicks. So I'm just going to adjust that. So now what I can see, I have the impulse, I have the correction, and then inside here I also have this impulse, and then I have another correction here. I just want to show you how all this comes together. So this is the daily time frame, right? So under normal circumstances, when we have a market like this, we expect what? One, two, three, right? We expect three touches. But remember what I said. The market doesn't always have to get to what? To the third touch. It does not always have to get to the third touch. I said it can reverse in terms of either a double top, a double bottom, inverse head and shoulders, depending on what type of reversal structure you have at that point of time, right? So what we basically had here, oh fuck, okay. Can I just remove everything right there? Okay, let me just put it back. Second nature either way. So once you see this, you can't unsee it. Okay, all right. So now from here, what we see, right, is that we have this corrective structure. And then now here, it's about this last part. Remember, it's about the last part. It's about the last part. It's about the last part. You see, we know that overall we have a correction, right? This is the daily. Still, we are looking for a continuation to the downside. And then we are looking for that continuation now in terms of either, this is where now you must have two buyers, or you must focus as to how you're going to take the trade. Because sometimes what I realize is that people will just be anticipating to say, okay, it's going to be a double top, it's a sell automatically, and that is not how it is. So you should be expecting that, okay, the market can come to this double top and then come push down and then continue going down, and then you put it like that. And then also you can have a focus which say the market can still come to the third touch here of the outer structure before it continues to go down, right? So but then that one you will learn it when we come to the whole strategy and everything. Right now we're still getting to learn the basics, but I need to brief you also on this one, right? So this is what you do usually when you see our chart. You'll find that, let's say for example, we have a chart like this. I think I sent out, if not gold, it was GJ last week. It had something like this. There was a green and a yellow. The yellow was saying that it's gonna break and go to the double top, and then when it breaks, push backs down, give me a flag. That's when I'm gonna take the trade. So it was based on the higher time frame, right? So on this higher time frame, that is what we have established right now. So what are we going to do now? What I'm gonna do now is just go to the 4-hour time frame. So now on the 4-hour time frame is gonna be giving us even more evidence to say, remember, we're still on the same structure. Nothing has changed. Nothing has changed. The same structure that we got from the weekly, the same structure that we got from the daily, right? And then the same outside structure. You see, the outside structure has not changed, but what can change is what is inside here. That is where we're going to find our patterns of continuation, correction, reversals, and stuff like that. As to, is this market going to break to the upside or is it going to break to the downside? That is where we're going to find all that information right here when we go to the lower time frames now. Okay, let me just what? Trading view is not loading this part of the screen right now. And then this is the part that we need. Okay. Either way, I can work. All right, it's fine.
Mine was acting up.
Yeah, it's fine. Either way, okay. So now what? Now what? We have this first. We have a high here, and we're expecting that the market can reverse either at a double top. Excuse me. Either at a double top or at a reversal. And then again, one thing that we need to know is that a double top does not necessarily mean that it must always be equal tops, right? We have a double top. We have different variations of double tops. We have different variations of double tops. It's not always equal tops, because most of the time when we have equal tops like this, most of the time the market comes and flushes out before it continue going down. Yeah, so I prefer, you see, a double top like this or a double top like this is perfect. It's perfect. Okay, so now let me just do this. Let's go back to the charts. Okay, there we go. We're back on the charts. Okay, so now what we can see here, right? What we can see here, another thing that we can see is that, right, you need to ask yourself how the market has been approaching. You need to ask yourself that how the market has been approaching that high. We have a high here, so we need to ask ourselves what is happening here. There is no progression. Like I said, there is no progression. There is no impulse, because after the impulse we expect impulse, correction, impulse. That is how it is. But then now when we impulse and we start correcting now, it says to us that this move is getting exhausted, right? The move is getting exhausted. Let me just do this real quick. Okay, I just wanted to go back to the daily. So this move here is getting exhausted, right? So now what I can also do now, since I already know what's happening down there. So now what I'm gonna do, I'm just gonna bring this a bit closer to my latest 2 touches. And then here what I can see is that, okay, this was the previous high, right? This was that impulse, right? This was that impulse, and then this was that correction after this impulse. So I have this impulse, I have this correction, I have this impulse. And remember, let me just do this. I want to remove that structure now. You know, PK. So now, remember, this is how the market has been moving. We have this is the impulse, this is the correction, right? And then now we're supposed to get what? We're supposed to get an impulse. But instead of the impulse, what do we have? Instead of an impulse, we have the market going up correctively, right? We have the market going up correctively. And knowing that for us, if we have, let me just do this. Okay, right. So now we have this structure here. Let's put this like so, somewhere around here. Okay, so now we have a structure like that, right? We have this structure. Now we can argue to say, okay, now we have this double top, of which this market moved to that double top in a corrective way. We're expecting a third touch here. We did not get a third touch. So if we didn't get that third touch, we need to understand what was happening on the last part, right? What was happening here on the last part? What happened? How did the price, why did price actually move like this? So this evidence, we're going to get it on this last part. And where we're going to get this last part? This last part, we're going to get it when we go to the 4-hour time frame. So that's basically what we're doing on this multi-time frame analysis. We're trying to get as much evidence as we can in conjunction with the higher time frame bias. So let me just, where's that? Okay, there we go. Okay. So now, Danny, when we come inside here, what can you see? We have here on this market, this was the high, right? Let me show you. We have a high here. We have a high here, right? And then we had this impulse. And then now, this is just a correction. It's just another correction. And all this is happening. We have a double top now. This is our 4-hour double top that we have, right? We have a double top, which is happening inside the double top, inside an overall double top, right? Remember, we have this double top here on the 4-hour. And then we also have, I don't know if the daily will be able to load for us again. Okay, there we go. Perfect. We have this double top on the 4-hour, right? And then again, we have this overall double top, right? So we have two double tops here. We have the overall double top, which is this one here. And then now we have this double top inside the structure, inside the 4-hour. So now, when you have moved to the 4-hour, let me just go to the 4-hour. When was that? 2019. I think it will be able to load the 1-hour time frame. Okay, so now on the what I want to focus on is the last part of my structure. What is actually happening here? How did price get to this double top formation up there? So now what I can see is that, all right, we had this impulse to the downside, and then we have this big correction that's been happening, right? This is just a big correction. So if I remove the bottom, line, you can see what has been happening here. This is just the big impulse, and then this is the correction. And then now here also on the last part, just to keep it clean, let me remove this one. So this is our last part. Remember what I said? I will not force a candle inside my structure. If it's outside, it's outside, right? I will not force a candle inside my structure. So let me do this. This one is fine, it's perfect, and this one is perfect. I have a perfect middle section right there. You'll learn about it also. I have a perfect middle section right there. So this one was a perfect one. This one was a perfect example. I have the double top here. You have the overall double top on the daily, right? So on the 4 hour, what you find is that you have this previous high, and then you have a market approaching structure in a very corrective way. It's giving you another double top. You know, other people would have sold here in this area. They would have sold in this area right here. When the market approached this area, they would have started selling to say this is the double top. And this is the overall double top, because the overall double top will be the previous higher high, right? It will be the previous higher high. So this one here is not, as much as you know, that's why sometimes, yeah, this is just a stop loss hunt. This is just a stop loss hunt, because all this here, all this which is here, this is liquidity. All here, there's liquidity here. There's a lot of liquidity up here. So obviously they're gonna come and flush the liquidity before they go down. So now, again, now we have this market structure, we have this ascending. And what did I say about an ascending structure? It breaks to the downside. Ne? So now we have the overall daily, which have a bear flag, right? We have the daily, which has a bear flag. And then now inside the bear flag, again, we have an ascending structure, which those are two confluences already that are giving that are being given. And then again, we already have another double top. That is confluence number 3, right? So you can see how everything builds up. You don't need an indicator, you don't need a line, you don't need what you call a moving average, because everything is just there. Everything. So already you have like 3 confluences. That is more than enough to take a trade, right? That is more than enough to take a trade. So from there now, if I go to the 1 hour, okay, good. It allowed us to go to the 1 hour. Okay. Or did it? Did it? You know, today as I was on Trading View, all my symbols were like gone. And then when I tried to click a symbol, it was like this symbol is not available. I was like, what the hell is happening with Trading View today? Yeah, I think there was an update. Yeah, yeah. It's not loading. Yeah. Oh, okay. It's not loading the 1 hour of the zone. Let me just. I really want it. Let me just give it time, maybe. If I can just take it a bit slow. Stop. Yeah, yeah. You can just let me know, because what we can just basically do is just to have an hour, at least an hour a day. Even if it's one of those days, we can just have an hour.
We could do the second.
Yeah, because I don't want us to lose momentum, you know. So yeah, I don't want us to be skipping. Okay, no, it's perfect. Then we can work with that. All right. Let me just go back to it. Hey, this lines, you know, this is exactly why we say support and resistance don't work. Remember, I just drew these lines randomly up there, here, you know, and this was before anything. But then when you come to this side now, they are acting as, look at this, it's acting as, look at this. Dr. PK, can you see this, man? Can you see this, PK? Look at this, it's acting as a resistance. This is why, like, they don't always work. They don't always work. So, okay. I wanted to go to the 1 hour time frame, but I guess I'll use another pair on the second example. So on the 1 hour time frame, what we're going to see now, right, is that we have this H4 double top, and then now on the 1 hour time frame, when you go to the 1 hour time frame, what do we have again now here? We have a double top again. So we have three double tops: double top on the daily, double top on the 4 hour, double top on the hourly time frame. Everything is just talking to you to say, sell me, sell me. So now, to refine that entry on the 1 hour, this is what I was going to do on the 1 hour. I was just going to do a refinement. I'll show you on another pair. I was just going to do a refinement of this, because on the 1 hour it's still the same thing, still the same principles, right? We were coming from the impulse, the correction, and then we had an impulse up to the third touch, and then here in the third touch we had a retrace candle, and then now we moved all the way down, right? And then from here, all this impulse, we have the correction, right? So yes, it's giving us some head and shoulder, which is an ugly one also, which is yeah, because yeah, they're not always clean. So our entry for us, we would have waited for this flag here. We would have entered here on this correction like this. We're gonna get the entry on the 15 minutes. So this one will not allow me to go to the 15 minutes. So let me just do that. This one won't allow me to go to the 15 minutes. So this was how the entry was gonna be like, right? And everything, and the targets, like I said, 90% of the rule of the structure, the moment it breaks out, we go all the way to the downside. If it doesn't break out, this is your first take profit, right? You see where the structure is on the third touch. This is your first take profit, and then after breaking out, that is then that the 90% rule gets activated. And looking at the risk to reward, obviously, like the risk to reward are always massive, because this one is like a 19-to-1 risk to reward, you know. It's like a 19-to-1 risk to reward. So when we go back to the, let me say, oh, where's my day? The daily. When we go to the daily, this is the move, right? And look at how it went all the way down, all the way down. But for us, this was the first 90%. And then what happened after here? We would have still caught the move, right? Because this is what happened. And then here, it's a correction, right?
Yes.
Then impulse. So it is still nature's theory. Everything is still as it is. Nothing has changed. As much as ugly as this market may look like, it's still an impulse correction. Impulse correction, a big one actually. This one was a big one. And then from there, inside this correction again, we have another correction, right? And then from there, there is the impulse. When did COVID start? 2019, was it? Yeah, it's 19. Yeah, yeah, yeah. So when you look at this structure, the structure was ready, Danny. That's why I'm saying that when this major news come, the structure is ready. The structure is ready. We have 1, 2, 3. The structure is ready to sell. When this major news come, the structure is already ready to sell. That's why I'm saying when we have a big sell like this, like the market is crashing, something like this, right? This there must always be major news. But for us, we always know that this is going to happen. You already know that this is going to happen via multi-time frame analysis. You already know that this is going to happen. So you already anticipate the next move before it happens, right? So let me just do quickly. I hate New Zealand USD. Okay. but via this trade, I learned a lot. I learned a lot. PK, are you still there? Because we were taking this trade for quite some time. We learned a lot on this trade. Uh, so finally now it is final. Like, man, we took this trade since I think it was March. Was it March? We've been taking this trade from March, bro. Like, and it was not. It didn't want to give in. It did not want to give in to come to the downside. So let me just show you what we did here on this one. Okay, so this is multi-time frame analysis. Let me just go to the weekly, like so. So this is multi-time frame analysis, right? So on the weekly time frame, what I'm going to identify now, here on the weekly time frame, I'm going to identify my previous, let me just go horizontal array, this one, my lowest low, my highest high, like that, right? This is what I have. So now, what I can see is that, excuse me, we have a move going up, impulse correction, impulse correction, impulse correction. But all this, what I can see again is that it looks more of a correction than an impulse, right? It looks more of a correction than an impulse. So if I just remove this, put this one here, put this one right there, and then now from there, I'm gonna highlight my area of value, which is where this market reversed right here. So now this is what I have. So my previous high here on the weekly, I have this zone here. So now what I have here, I have this as a full impulse, right? This was the impulse correction impulse, but it's an impulse. And then after an impulse, what do I have? What must happen? A correction must follow, right? A correction must follow. So what we do here is just that we come here and we basically highlight that correction, which is like that, right? So when we go to the daily, I want you to see how this market structure transforms throughout. It's still the same structure. See, this is the same structure that I draw on the weekly time frame, right? So I have the impulse, I have this impulse, this correction, this impulse, and then this correction, right? So now I can just bring this one back here for the previous correction. So actually this market is still very, very good. So what we're looking for here, what we're looking for is this 1, 2, 3 touches of the structure. So, and obviously another thing that we're looking for is that after it breaks here, only after it breaks, that is when the 90% rule gets active. Only after when it breaks, that is when the 90% rule gets active, right? If it does not break here and somehow it give us some bullish momentum, then we will be willing and waiting to say, okay, fine. If it does not break here and go down, then we know that this market will still continue to go to the upside, like so, right? Correctively, and it will not change our bias. It will not change our bias because we are still in a correctional phase until we break this previous high. We are still in a correctional phase. We are still on a downtrend until we break. This is the major one. Until we break this one, we are still on a downtrend. Okay. So let me just do this. I remove this. So now understanding that from your daily time frame, what you do now, you just go down to your 4-hour like this. So you can see now it's still the same structure, but now we are in the 4-hour, right? We're in the 4-hour now. So now what happened here is that how was this market moving high? It was obviously going up, and then now we have I don't like, I want the wicks. I want the wicks. Okay, so I still have a little bit of space here to run to. So basically what can happen here, right? What can happen here now, since this is the 4 hour, we're gonna go to the 1 hour time frame. We want to know what is happening here. Are we getting that? It's either we're getting that continuation correction or we're gonna get a reversal correction right here. This is the area, this is where it's important, because this market is at an area of value, right, which is the outside structure. And now we need to see if this market will break. This is where then now, let me just do this. This is where then now you'll see us having something like this, say something like this on the analysis. Sometimes I draw them in before they even, okay. So what we can have something like this on the analysis, meaning that you're gonna take this trade if this trade it breaks out of here and all the way to the downside. So you will only take this trade if it breaks out here and give you this continuation correction to say it's gonna go to the downside. Because as it is here, already you have a negative confluence outside this market. So you cannot trade a market when we are approaching a negative confluence, right? Because if you want to sell, if you are selling, this is the negative confluence of selling, right? Because it can buy here, right? So if you are just like if you are buying, you cannot come and buy when the market is here, because this is a negative confluence for buying. It can sell. The market can decide to sell there. So you cannot do that. But you will also learn about that, where to buy, where to sell when we come to different zones, different trading zones, and where you catch those sniper entries. Okay, so now like this, you already know what is happening. Now, if I just go to the 1 hour, so now on the 1 hour, I want to focus on what is happening right here, right? I want to focus on what is happening right here. So what we can see is that, okay, we had this impulse. We are coming from an impulse, right? We're coming from an impulse. And immediately after an impulse, what do we expect? Correction. So if we have a structure like so, okay, so I have 1 2, so I can either come and give me this third touch here and go down, or it can go down from here, give me a correction and go down. This is where now the forecasting part becomes very important, right? And then now when you look at a market like this, how are you going to enter a market like this? If you want to be safe and conservative, we have what we call a risk entry, right, and a safe entry. So what we do by saying it's a risk entry, it does not mean that it's actually gonna mess up your account, basically. So by a risk entry is that it's not yet fully confirmed. So it means that a risk entry can be a third touch of structure here. If I get a touch of structure there and I get a high test candle or a high test reversal or a doji or something that shows me that there's no more momentum there at the third touch, I can be able to take that trade, right, for that 30 pip stop loss, and then obviously risk to reward. I'll be looking for the next lows, which will be these ones. So I'll be looking for the next lows, which will be these ones right here. So I can actually take that trade, which will be this will be the risky one. And then the one which is a safe trade would be one that you take when this market breaks out of this overall correction, right? When it breaks out of this correction here, and then your stop loss will be at the top of the structure. It means that it is not likely to come back. It won't come back. But then the down part between the two types of entries, like how you can see them here, né? like the way you can see them, you can see that on the safe one, on the safe entry here, you can see we have like 2.57 risk to reward ratio on the safe entry, but it is a safe entry. And then here on the risky entry, we have 4.05 risk to reward ratio, and actually the stop loss is actually too wide, because if we have something like this, it was going to be something like this. It's actually 8. So you can see the only downside is that between the two types of entries, you have the other one have more risk to reward, and then the other one will have legal risk to reward. But then it's all up to what you want at that particular time, because we are not looking at the money, we are looking at, if it's more than 1:3, I think it's a good trade. As long as it's more than 1:3, that's a good trade. That's a good trade to take. So now from here on the 1 hour, you see how I broke it down all the way to the 1 hour to where I would eventually look for my entry. So that is the basics of multi-time frame analysis, right? That is the basics of multi-time frame analysis. You start it all the way from the from the weekly, daily, 4 hour, and 1 hour, right? And then you analyze from there. From there, you don't change anything. You don't say that now because you are on the weekly time frame now, you must change your structure. No, you don't change your structure. What you basically do, you just adjust along the way. You just adjust along, like how I'm doing now. You just adjust along the way. You just adjust along the way, because when you check the daily, sometimes you'll have weeks and weeks, you'll have bigger weeks, and then on those weeks on the weekly on the smaller time frame, they are actually candles that you can put a beautiful structure just like this. So you can see what's happening. We have the impulse. I have this big correction that has been happening. So this is then now that will be waiting to say, if this move breaks here, we'll be waiting for this. This is then now that the 90% will become active. But if it doesn't, then we might come back. I don't know, another double top. I don't know, something is, yeah, we can get another double top right there before we go down. It's also possible. So we need to factor in all those when it comes to multi, okay, multi-time frame analysis. So let me just check something here. Okay. Okay. Okay, so now here, this is DXY, right? This is DXY. Okay. So I'm gonna do the MTF multi-time frame analysis again on DXY, right? So we have DXY on the weekly, and what can you see? We are coming from an impulse, and then now we have what? A correction, right? Yes. So now what we're gonna do, we're just gonna come to simply draw in our correction. As simple as that. We're just gonna come and draw in our correction. As simple as that. So now you can already see that, okay, we have the impulse, and then this looks like a big bear flag. Remember, this is on the weekly. So this is a bear flag. Obviously, we'll be waiting for a move to come to the downside before any movement to the upside. So already you have that bias from the weekly structure. The weekly structure has already told you that we can be waiting for the 1, the 2, the third touch, and then come and give us a third touch here at the bottom before it moves up, right? Then from there now, after finding out that information from the weekly, Let me just highlight the previous weekly on this structure. Probably won't get there though. Okay, and then I'm gonna just go to the daily like that. Then now what am I doing here on the same structure? I'm just adjusting it, right? I'm just adjusting it and making sure that I'm right at the wicks. Okay, there we go. I'm right at the wicks. Okay, good. Now we want to understand that, okay, we have this third touch that we're waiting for, and on top of that we also have this double top formation that we can have, right? We also have this double top formation that we can have before we come down. So now what we want to understand is how is this price pushing to the upside. So from what you can see here, you can see how this price has been pushing. First things first, we had this big descending structure right there. We had this about last year, I think last year. Yeah, it was last year because I was looking at this, I think last year. Yep. So we have this big descending structure right there. And then from there, what happened next? Impulse, right? And then from there, what happened after that impulse? Correction. Impulse, correction, impulse, correction, impulse, correction, impulse, another correction. And then now we're at the impulse. So we're just expecting this move to do this, to come all the way here, just like that, just like how it's moving. So already, right, we're gonna go to the let me just try to draw this in proper. Let me not use this the brush. So I'm saying, that's why I was saying, Daniel, this is where we're gonna spend a lot of time together on this part, the multi-time frame analysis. We're gonna spend a lot of time together here. Once we finish with this one, because this one is like, it's like the core. Once we finish with multi-time frame analysis, the rest will just be flowing. The rest will just be flowing. Okay. So we have the impulse, the correction, the impulse, the correction, the impulse, the correction, the impulse, the last correction right there. Yeah. I just want this to be visible. This was going down like that. This is the impulse. Okay. So now I just want us, there we go. There we go. So you can see what has been happening here. Impulse correction, impulse correction, impulse correction. That's how the market has been moving all the way to the upside. And looking at it, when it's doing this, when the market is doing so many corrections after an impulse, so many corrections after an impulse, then we can conclude that this whole move is what? It's a correction, right? This whole move is a correction. So if I try to get an outside structure, for sure I might find something. Let me just see if it has already started to form or if it's forming. Yeah, it's forming. If I try to find it, it's still forming there. The outside structure for this one is still forming, but here I already have. So here I'm expecting a touch somewhere around here, which will be at this double top formation. So that's basically what we do with multi-time frame. So now let me just go to the 4 hour to see what's happening, because now you already know we have the impulse, we have the correction, we have the impulse with the correction. So now when you go to your 4 hour, you're going to be focusing on what is happening right here, your current price, right? What has happened here, you already know. So now we want to see how are we going to take that entry. So if you go to the 4 hour time frame like this, so here I'm gonna do the same thing. I'm just readjusting my trend lines like that. So I have this impulse, I have this correction, and then now this impulse that is happening right here, it's not yet so impulsive, it's not so impulsive, it's not very conclusive, but yeah, we'll see how it develops. If you go to the 1 hour now, when we're gonna find our entry, when we go to the 1 hour, so when you go to the 1 hour, then you'll be looking at this market here, right? You'll be looking at this market here, what is happening here, right? So this one is the one that is going to tell you that we are going to go to the downside or we are going to continue to the upside.